Traders, it's the 27th of July. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve and Jamie this morning. How you doing, gents?
Very good, thanks. Hey.
Yeah, all good, thanks, Joe. All good.
Superb. Okay, so it's Fed Wednesday. All eyes on the Federal Reserve this evening for their latest update on policy and what they'll be doing with interest rates. So let's get stuck into the latest headlines of what else is moving markets potentially today. First up, in terms of data, yesterday we had the US consumer confidence figure and that retreated further, declined to 95.7 for July from 98.4 in June, and this was also below the census forecasts of 97.4. There was a decline in the present condition index and a small dip in the expectations component, with consumers also slightly less confident in the labour market. We also saw some numbers out on the home sales side of things, on new home sales in particular. That declined sharply to an annual rate of 590,000 for June. This is from a revised 642 previously and well below the consensus forecast of 660,000. So a couple of bad data numbers there from the US yesterday. In terms of what's going on in Europe, gas fears triggered renewed euro losses. The euro dipped sharply on Tuesday with renewed fears surrounding the economic outlook as gas supplies through the Nord Stream pipeline are due to be cut again this week. And gas prices hit a fresh 4-month high, reinforcing fears over the outlook. The euro versus the Swiss franc slid to a fresh 7-year low. The Swiss franc gains supported there was fresh support for Swiss franc on Tuesday, primarily as a function of the losses in confidence in the Eurozone outlook. Weaker risk conditions and expectations of nominal franc gains offset declines in real terms, and that was also important in strengthening the Swiss currency. So the euro came under heavy pressure yesterday, and none more so against the Swiss franc. In terms of the Federal Reserve, the rhetoric will be very crucial on the meeting later today. The Federal Reserve is expected to increase interest rates by a further 75 basis points to 2.5% at the policy meeting later today. The rhetoric from Fed Chair Powell is likely to be crucial for the market reaction. In particular, the balance between inflation pressures and the growth outlook will be a crucial element for the markets to digest. Overnight, we had inflation numbers from Australia, and hype faded slightly. The second quarter Australian CPI data recorded a 1.8% increase in headline prices after a 2.1% increase previously, and this was marginally below the expectations of 1.9%. So potentially some good signs there with regards to inflation that it may be peaking. Markets still, however, do expect a 50 basis point increase in rates next week, but the overall rate expectations were scaled back slightly following the data. So on to today's trading session and looking at how price action is setting up for the day ahead. Steve, would you mind kicking us off with your thoughts today?
Yep. Yeah, of course. Can you hear me okay?
Yep.
Yeah. Okay. I'll take a look at Bitcoin. That had a bit of a positive reaction yesterday, actually. We posted a bullish hammer, almost a doji-like bullish hammer, reacting from this upward trending support line, which goes back. This is the corrective channel that we're seeing. So that was mildly positive. It hasn't really followed through after the previous day's big sell-off. We're still below the 21-day moving average as well, so not really getting too carried away with that yet. If you look at the 4-hour chart, we're below the Ichimoku cloud also as well, and likely to run into resistance all the way up from 21,500 all the way up to 22,500 on Bitcoin. On the gold side of things, there was initially or overall a bit of pressure to the downside, and we managed to hold support at 1713. We can see there's been multiple occasions over the last 3 or 4 days where that support has held, and it's also this may be a sign of the reaction from the decent support that we've highlighted, the really decent support down towards 1677. the reaction higher. We've had a little bit of a pullback, maybe the opportunity for another reaction to retest the 1750 resistance level in gold. On crude oil, we're looking at an inverse head and shoulders formation. I thought this would carry on yesterday, bearing in mind my gun to head trade idea, but in fact we saw a sort of like a break to the downside, although it hasn't taken out the support that comes in at 92.35 or 92.27 to 92.35, this area here. Still got the hallmarks of an inverse head and shoulders formation, maybe a little bit more to play out. Interim support comes in now at $94. A break below there will pressure the 92.27 area, and obviously a break below there would then focus on the 88.20 support level. However, looks quite positive at the moment, so I'm still not giving up on my short-term positive theme in crude oil. Yeah, I think it'd be an interesting day today. We're obviously with the Fed meeting later, expecting 0.75 of a point, but there is talk of a whole percentage point increase, which will definitely put the cat amongst the pigeons in
For
terms.
sure. Steve, would you mind taking a look at gas just to see what's going
Yeah.
on with that?
Yeah, gas oil had a spike higher yesterday. Really got up to resistance at $9.40. If you look back now to May and also June, we had previous attempts at breaking this. The real high was 9.65 on this chart. Didn't quite get to there, but had that real nice spike higher, but corrected lower from there, but still in a decent uptrend. Dips look to be the only way to go, buying dips in this. So yeah, overall on a daily candle, that doesn't look too healthy. Almost a shooting star like candle, but I wouldn't be too concerned unless we get a break of 850, that 850 level, and a negative close, and that would sort of highlight maybe an evening star formation. But at the moment it's holding, and that spike higher may have more to play out.
Yeah.
Go through the day.
Sure. Obviously, being driven by this situation with the Nord Stream pipeline, which, as we said, is due to be cut again this week. So that is keeping obviously gas prices quite highly elevated, and it is also playing into the FX space as well. If we take a look at, first of all, we start off with the dollar index as we often do. And then we can drill down into the euro losses that we saw yesterday. So first up, dollar index, we saw a decent bounce from the bottom of the bullish channel that we've got drawn on here, pretty much engulfing all of the losses that we'd seen going back to the 21st of July. So a really strong move to the upside seen yesterday. That's also been partly attributed to month-end corporate buying. Obviously, we close to the end of the month, so maybe there's some book balancing going on there and some conversions taking place, which may have had an impact. But primarily, I think it is just due to the fact that we're in a pretty strong uptrend, and the dollar continues to be the safest and best performing asset around at the moment. So we continue to see that be on the front foot. A little bit of losses today ahead of the Federal Reserve, which I guess is to be expected. I think we probably will see some sort of holding pattern in the dollar index ahead of the Federal Reserve later today. In terms of what's happened with the euro, we saw obviously on the flip side of the dollar index chart, a really big move to the downside yesterday with euro US dollar, really aggressive red candle posting losses. And again, obviously this has been triggered by the concerns over the Nord Stream gas pipeline. And we saw losses pretty much across the board on euro yesterday. So this is against the Aussie dollar. Again, big red candle moving to the downside. Euro CAD, similar sort of thing, but seems to be holding around some support here. Euro Swiss, as we talked about, hitting fresh 7-year lows. Really horrible move lower there, taking out that 98.06 level, which was providing some support from the 13th of July. If we take a look at Euro Sterling, again, Following the breakout of this bullish channel, we've seen prices continue to move to the downside. Very close now to taking out this low from the 13th of July, which comes in at 84.03. And looking at the chart at the minute, you probably wouldn't back against that happening quite quickly. Euro yen, that continues to fail at the underside of this bullish trend line, and prices look to be heading lower. We've got support to keep an eye out here on, keep an eye on at 136.85. So yeah, looking pretty poor for euro at the moment, has to be said. So let's just take a look at some of the other dollar currencies ahead of the Federal Reserve later today. Aussie US dollar rallied into downtrend resistance and prices have stalled. So maybe that's a turning point there on this particular pair to start rolling over yet again to the downside. If we take a look at cable, not much going on here at the moment. As I continue to mention really in these morning videos, lots of indecision in these candles that we're seeing at the minute, failing to get above resistance at 120.56. So yeah, no man's land really for that at the moment, and lacking any real volatility for traders to make or take advantage of. New Zealand dollar versus US dollar, I guess it's a similar situation to what we just looked at on the Aussie, in that it's probably quite close to trend line resistance. In fact, it did overshoot that, but looks to be rolling over. Big doji candle formed here on the 22nd of July, and prices appear to be rolling over to the downside. If we look at dollar CAD, that's being supported by this level here at 128.19. Overall, expecting prices to probably remain range bound, but if we do get a break below this support at 28.19, then lower prices are likely towards the lower end of that range. Dollar Swiss, again, quite choppy, quite range bound. We've got support down here around 94.95, so I wouldn't be surprised if prices continue to drift lower there, indicating a stronger Swiss franc. And if we look at dollar yen, that has pulled back to trend support from going back to March. Still looks pretty strong and pretty robust overall, so wouldn't back against higher prices being seen on that in the short term. Moving on to the indices, let's take a quick look at the ASX 200. We saw losses yesterday, but we're back on the front foot again today, up by 0.6%, engulfing pretty much all of the losses that we posted yesterday. Still targeting a move to this band of resistance up here around 69.00. So that looks to be okay for now. If we look at the DAX, we saw a pullback yesterday to retest this new support at 13,022. So we've got a small double bottom pattern that played out here. We saw a push to the upside. Now we've seen a pullback to test that, and the buyers seemed as though they were quite interested in stepping in at that point, and we closed well off of the worst levels of the session. So that may be one to keep an eye on for higher prices. If we take a look at Nasdaq, we saw a pullback there to test support at 12,225. We closed below it, but we're back above it at the moment, up by 0.77% as things stand at the minute. But obviously very early in the session and lots that could change with that Federal Reserve meeting later today. So a bit of a mixed bag, some mixed signals on that one. Not sure I'd want to be too involved in that ahead of the Fed later. S&P 500, similar situation, bit of a push to the upside through this 3946 resistance. We've seen a pullback. We saw a close below it yesterday, but we're back above it again today. So very similar actually to the Nasdaq chart. Mixed and conflicting signals for the time being. Still believe we've got a large top pattern in place, and that is going to dictate direction. So maybe this is just a correction to the upside before further losses, but it's difficult to say at this point. Jamie, what's going on in stock world?
Yeah, stock world's more interesting at the moment because we've got all the earnings stuff coming out, which means there's some pretty volatile moves, which is always exciting to look at. But starting off with, we'll look at our biggest gainer and loser. Our biggest gainer, we're back with PGY, and I've been looking in the news this morning just to find anything that makes stock go up like 700% in just over a week. The only thing I could find is that it's a possible short squeeze. Apparently the short interest was really high and just been targeted by speculation. So yeah, up 73% again yesterday. But as I say, if you kind of take from the bottom of this move on the 19th of July to where it got to yesterday, we're up about 786%. So It's been quite the climb. You can see the volume is huge compared to its average daily. So yesterday it traded at 58 million shares compared to its usual 8.96, and that's also with these previous two spikes being accounted for in the average volume too. So yeah, this one, I mean, you never know how high these squeezes can go, so probably not one to touch if you're looking for something to short. I don't think this is the one. You never know where this can go, so just be careful out there. TSC is our biggest loser though. This is Trincio something, down almost 22% yesterday, and I did have a look at this. I found, maybe I didn't. Oh, this is still looking at PGY. Let's see if it will refresh. Come on, TradingView, you got this. No, it doesn't. Let's try this. Here we go. There we go. TSC had to pause sale process of its, this is a weird word, Styrenics business, and I think that's to do with the war in Ukraine, which is having effect on its business. So that was down, as I say, almost 22% yesterday. So that's our biggest loser of the day. Jumping into our stock heat map, we've got a pretty mixed bag, but I'd say overall the sentiment was negative yesterday. You can see Amazon was the main standout, down 5.23%. Tesla was down 3.5%. Microsoft and Google were both down, but we will get onto both of those because they actually reported earnings. And I believe that after the market closed, which is when they reported, they actually rallied quite nicely. So we will actually, on that note, let's jump into some of the individual names. We'll work through it alphabetically. I think that makes sense. We'll start off with Apple. We thought there would be some selling coming at some point. It tagged the 50% Fibonacci retracement, broke above it a little bit, but then the sellers stepped in a little bit later. One to keep an eye on. It looks like earnings coming up tomorrow after close. We'll have it quickly pull up the corporate calendar after I run through some of these and have a look. But yeah, a little bit of selling pressure. I mean, nothing too crazy on the volume, but it all could be waiting for the Fed and earnings tomorrow evening. So, like I say, with all these ones trading around earnings, be careful because you can gap up overnight and there's nothing you can do about it, or it can gap down. So just be a little bit careful. Amazon, we've got similar kind of picture. We did have this pretty sizable gap down though. Actually, let's move this out of the way. That was an idea we posted quite recently. I don't think we got tagged in on this, unfortunately. We just missed our entry, but it looks like it's moving lower, which is good if anyone got in a little bit early on that. But yeah, gap down pretty substantially yesterday. Let's see if there's anything in the news for this. What have we got for Amazon? Oh, there's too much to read.
I think there was an article there about recession fears. That there were second one down.
You read that so quickly. Oh, second news story down. Got you.
Yeah.
Here we go. I thought you just read the second paragraph. Techs at long gauge health are in focus this week with Silicon Valley up for earnings professional. Investors appear to be bracing for the worst. All closed down. Yeah, there was. I mean, it was pretty. When you look at the larger list of stocks I've got here, if I change it to percentages, you can see it was actually a pretty rubbish day. And we will get on to Coinbase, so it had a particularly bad day. But yeah, it was a struggle for a lot of these names yesterday. And with Amazon gapping down pretty substantially and earnings again, looks like we can check this tomorrow. Doesn't say if it's evening or
Tomorrow,
before the open.
I think it will be after market close.
Yeah,
I'll confirm.
So. Nice one, thank you, Joe. But yeah, I mean, certainly this large gap down into earnings doesn't fill me with a load of confidence. But it remains to be seen how it gets on. So be careful. I'm actually not going to say it anymore, but just be careful. I said it again. Never mind. Yeah, pretty nasty gap down there on Amazon. Coinbase, like we said, look at this. This is nasty business here. We did get a break above this key resistance level. We didn't quite get to the next resistance level, which we had marked at about 82.60 before the sellers really came in. And this was a little bit strange to me, and we'll perhaps jump into the news because there wasn't too much horribleness on crypto yesterday, I didn't think. Not as bad as it has been. But to be down 21% suggests there is something wrong. I think it was something to do with the SEC. Let's have a quick look. Coinbase fell almost 21% following a Bloomberg report citing unnamed people familiar with the matter that the US SEC is investigating whether the cryptocurrency exchange is allowing investors to trade other securities as well. So don't be messing with the SEC. It will make your stock fall 21% on a huge gap down and then closing at the bottom end of the day's range as well. So nasty business. I think this will head back down to 46.16 and we'll see how it gets on at that support level. Well, I looked at CrowdStrike. Yeah, CrowdStrike, we had this trend line that was in place. This was looking quite nice for a while. It looks to be possibly topping out with a double, almost triple top formation. Breaking the trend line yesterday. It's not perfectly drawn, but something like that still. It's quite conclusively closed below. We're at short-term support being propped up at this kind of 169, 168 level. Let's see if the buyers step in, but this is pretty negative looking, possibly for the next leg lower. Where do the buyers step back in? I think if they don't hold this level, where am I going? Here we go. Possibly something around here, 153. We've had buyers step in here before, so that's probably where I'd be looking for that to happen. Google, this reported earnings, actually missed, I believe. We can check out the specifics, but it looks like it missed by a little bit. But if we drill down, so that was the daily close, so this doesn't show after hours trading, but if I show you on the 4-hour chart, you can see we did actually rally off that earnings news, which is a positive sign for sure. So this closed at 110 after hours. So if we look at this here, that is about, yeah, it closes right up here. So interesting, you know, missing on earnings, but the stock rallying is potentially a good sign for the market. And there was a similar story on Microsoft. We'll look at that quickly while we're on the subject. Again, pretty negative day, down 2.68%. But if we drill down to this, I mean, obviously a pretty wide-ranging bar, as can be expected with earnings, but closing at 261.90. Let's take this out. 261.90 is right above the day's range. So, yeah, I mean, I think that's a good sign. Obviously, not great for bulls that they missed, but I think the price action is relatively positive. But the follow-through on that today will be interesting for me. Will there be a sell-off straight after, or will the bulls manage to hold that earnings rally? I think that'll be interesting to look at. Meta Platforms, again, looks like one we're getting earnings after the close today. We're right at this key support level, just in front of it, but not great price action, as we've said, going into earnings. It started off looking pretty good, kind of that mid part of July, but certainly this gap down here, and then 2 consecutive days after that of negative trading. So not looking super positive, but we'll see how that gets on. Why have I highlighted Pinterest? What's interesting me? It's at support. I mean, that would do. That's interesting enough. Yeah, pretty key support, 17.25. The buyers have stepped in here in May and then again in June. Let's see if they follow suit and go do the same into July. Earnings coming up at the start of August on the 1st. What day is the 1st of August? We're looking at next Monday. So we'll see how that gets on. I'm not sure why I've looked at Rye. That's from yesterday. I'm not interested. Shopify is interesting though. We put out an idea for this recently. Let me move this along. Shorting this at this kind of trendline resistance, previous resistance here, and this gapped right down here, 14% down on the day, and that's again right before earnings. This is actually earnings coming out before the open today. I don't think they have yet, but yeah, I mean, this is pretty horrible looking. Let's see if there was any news, maybe with some guidance or something. Wow, I can't read any of this. I'm not going to. Here we go. Shopify, the worst performing index, posted their biggest daily loss. The company laid off 10% of its workforce. That's not good. You don't need me to tell you that. So yeah, earnings for that one before the open today, so keep an eye on that. Twitter, that's left over from yesterday. I don't care about Twitter today. Still coiling, it looks like, at this resistance. So actually, it's still interesting to me somewhat, but I want to see a break. Lloyd's, oh, look at this. I'd kind of marked this before the stream that we'd run into this trendline resistance, but look, we've gapped above it. Potentially on some earnings news. I'm not completely sure, but earnings coming out today before the open. So a pretty nice move above this trendline resistance. Maybe the bulls are getting back in control of this. Finishing on Vodafone. Only reason I wanted to look at this is because we looked at this resistance here, kind of got a bit of a break above it, but yesterday it was just a pretty hard no. That's not going to happen, at least for now. Where to next on Vodafone? It's in the middle of this pretty big range we've seen. If the sellers do get more control, I think, you know, we could be heading back towards this 114 level. But a lot of these stocks reporting earnings in the next kind of few days or few weeks. And definitely something to be aware of. I was actually thinking before the stream started, like, you know what, it'd be a really useful tool to have something that shows exactly which stocks reporting earnings on each day, so you can kind of either avoid them, or you can, I don't know, you can change your positions if you're already in them, and we actually already have that tool. So it's like, you know, that makes sense as why we've got it. And we can perhaps jump into that now and have a look at what's reporting today.
Yeah, why not? Nice segue there, Jamie. So this is our corporate calendar, and there's plenty of filters on here, but what I've done is just tick the most anticipated earnings releases, just because they tend to be the ones that are most in focus. And if we look at yesterday's announcements, we can see Alphabet and Microsoft were the big names that came out, both of which with red numbers on the tiles to indicate that they came in worse than the analyst forecasts. And if we visualize this here on Alphabet in particular, we can see there's a pretty rich history of beating earnings estimates, but here we saw a massive miss, quite substantial really. So there was a forecast of 25.56 and it actually came in at 1.21. But as you said, Jamie, the price on the after hours trading actually went higher. So I need to do a bit of digging as to why that was the case, but there was clearly a very big miss there in terms of the earnings per share. So bear that in mind, traders, if you are thinking of jumping into Google shares today. Looking at Microsoft, that was pretty much in line. I know it was a miss. It was 2.29 we were expecting. It came in at 2.23, 3% under the expectation. So although it was a miss, it wasn't certainly as drastic as what we just saw with Alphabet. So if we look at what's due out today, in terms of the big names, we've got Meta Platforms, I think is really the standout amongst all of these names that we have here. We're expecting 2.58 in terms of the earnings per share. As we can see here, largely comes in ahead of earnings estimates, but we did see this miss here, which actually triggered the big move lower in price over recent months. And typically, we've seen prices move to the downside as a result of earnings. In fact, last time we actually saw, although there was a surprise, the price moved 3.36% lower in the following session. So we'll have to wait and see what happens today. This is the average, and on average, prices moved down by 2% after earnings. So we'll see what happens after hours today. So you mentioned actually there was a couple more later in the week which might be of interest. So yeah, Amazon and Apple and also Intel all coming out on Thursday. So we'll do a bit of a preview of those tomorrow ahead of their numbers.
Can you just have a look at Alphabet again, Joe? What the miss was?
There we go. So previous was 24.62, forecast was 25.56, and the actual was coming on this data at 1.21.
Yeah, I mean, I've looked on other websites. It is saying that they were expecting 128. So it wasn't as much of a miss as that maybe highlights. So we'll have to look into that.
Okay. We have to slap our data scientists on the wrist for that one, then, shall we?
Well, I don't know. I don't know what sort of like it's picked up there.
Could it be? I don't know if this is a thing. Could be really stupid. Could it be still the split that happened? There was a 20 to 1 stock split.
Yeah, that's what I was thinking. It was
maybe we need to divide it by 20 then, do we?
Yeah,
that's possibly the thing. About right.
Yeah, so that would say 1.27 was the forecasts, and the actual was 1.21.
Exactly.
Yeah, that's what TradingView says. So that
right.
Makes sense.
So we've been tripped up there by the stock split on that data. Okay, cool. So
good to know that
it wasn't a 95% miss on the earnings then with Google, and that probably suggests why.
But that's the thing. It doesn't make sense that it rallied on the back of it. So I just thought I'd investigate a bit further. Yeah. I mean, for everything, it sort of like feels like we're at quite a pivotal point, especially with this Fed rate rise tonight. I mean, even if we get a surprise additional quarter point, so we get a whole full 1 percentage point rise, I'm sort of like thinking how it will impact the market. It's almost, I don't know. I think obviously the volatility will be pretty much through the roof. But I think if they are rising by more than expected, is that a real sign that there's proper concerns out there over the inflation not being under control, impacting
definitely
on the economy at a later date? So although it might be good for the dollar initially, we could quite easily see a quick reversal in that, and obviously in the stock markets might react positively initially, gold might react negatively initially, but could we see the second wave move catching a lot of people out tonight? That's what I feel.
Quite possibly. I guess all eyes will be on the actual speech, because he's
Yeah,
referenced previously that he saw inflation peaking. But if rates are to be moved more aggressively than we're expecting, then that would suggest that that's not the case.
yeah, exactly. Yeah. Okay.
Okay, so let's move it on to the gun to the head challenge. So this is where all three of us pick a live trade idea on the video each day, and each of these ideas that we pick must have a stop on a target. The ideas are placed at market, so we're just coming up with them pretty quickly, and effectively what is our favorite trade to take right now. These ideas will expire at 9 p.m. UK time, or when the stop or the targets are reached. If anybody wants to check them out, you can do so on our TradingView profile, which is signal_center. And you can check out previous trade ideas that we've published. So just to run through what we did yesterday, I went short of sterling yen, and I left the office a little earlier yesterday, so I was quite pleased with myself when I left, because this was moving nicely to the downside. But it was a pretty strong rally from sort of 3 o'clock onwards. Managed to hold on to a tiny bit of profit. I think it was up 0.08R on that trade, but eventually it did actually go on to hit my stop. So the close at 9 p.m. saved me on that. Steve, you were buying oil. You talked about it in your analysis this morning, looking at this inverse sort of reversal or head and shoulders type pattern. And sadly, it didn't work out, but it looks as though that head and shoulders might be looking a little bit more classic in its setup now. So maybe still some opportunity on that. And Jamie, you were buying the DAX. Nice range highlighted there. But sadly, a bit of volatility yesterday as a result of what we saw with the Nord Stream gas pipeline news. So sadly, that was stopped out yesterday. But as part of the game, we have risk management in place to prevent losses from getting out of control. So we've dusted ourselves down and we get to go again. Who's got an idea for us this morning?
I'm happy to go first, as I've spotted it the last couple of days. Just going to gold again, just wanted to sort of highlight a couple of a bit more in depth. Really, this support level is a 38.2% Fibonacci retracement level, and obviously we got a decent candle out of it last week. And as I've said this week, the potential for this to bottom out here. Looking at the daily chart, really a break of this level for me leads to a much deeper correction, and my bullish gold bias that I've had after dipping to this level would dissipate quite quickly. On the 4-hour chart, we have seen price action, as I said earlier, battling with this Ichimoku cloud, looking again a bit of an inverse head and shoulders formation. So I obviously the Fed later on, the volatility in gold is going to be pretty high. This is going to be this is a very high risk trade, but I'm going to sort of like try and rely on this 1713 support level to hold. Let's round this up to 1719. Don't mind giving away a few ticks. And yeah, well, I'm quite happy with this target level. So what am I going to go for, Stevie boy? 4-to-1 risk reward, targeting a move to 1755. So buying gold at 1719, stop is at 1710, the target is 1755. As I say, I expect if they do surprise by raising rates more than 3/4 of a basis point, we could easily get a spike lower. But I think that there is potential for this to reverse. So on a long-term play, I'd be looking to buy dips around here, but just for the sake of the intraday trade idea, I'm going to go long of it anyway. 1713 is a support. My stop is below there. I'm targeting the reaction higher to 1755.
Very nice. Good luck, Steve. Jamie, have you got one ready?
Yeah, I'm good to go. So I am taking a look. I'm going to China today. and I'm seeing some quite negative price actions, a succession of lower highs, and a short-term support level that's attempting to hold, but I think it's ready to go. It's looking right for the taking for a little bit of a move lower. So I'm looking to sell this actually. It's a bit of a preemptive break. I'd certainly rather see a close on the 4-hour candle below this level, which we haven't done yet, but with these lower highs coming in, the selling pressure is obvious to me, and I'm just going to hope, even if it doesn't break right at this moment, I'm keeping my stop above the recent high, not the recent swing high already, but just kind of this recent candle here, which gives me a decent enough risk reward still. So I'm going to sell the China 50 at current price, which is 13943. There we go. And nice, there we go. And we have a take profit at these recent recent-ish back in June swing lows, which has been a pretty key level as well. You can see it's found resistance at this level too, so I think that's where the buyers might try and step back in, and that is at about 13630. And we'll keep the stop, like I say, nice and tight at 14078. Which doesn't give us a huge risk reward, but 2.32 is more than enough to make it worth looking at for me. So hoping for a move lower on the China 50 today.
Okay, good luck. I'm going to take a look at Aussie versus the Canadian dollar. Just running through my FX pairs today. This is one that particularly stood out to me. If I look at the daily chart, we can see here that prices have rallied into a downtrend resistance line and stalled in here. So I would be using that as a cue to potentially get short. Just remove that. And if we look at the intraday price action on the hourly, we can see prices have moved higher within this bullish channel. We've seen a breakdown in recent hours through this support here at 89.27, which now appears to be acting as a resistance. So I'm going to sell at the current price of 89.15. My stop is really tight there. Shall I go with that? Let's just give it a couple of ticks. We'll give it a 15 ticks. So stop is at 89.30, and I'm going to target a move down to the 50% retracement of this entire move here, which comes in at 88.47, giving me a risk reward ratio of 4.39 on Aussie CAD. And I'm going to get that published up right now.
Excellent.
Okay, so day ahead, obviously we've gone through the earnings side of things on the corporate front, but just to reiterate, we do have some other economic data out today which may be well watched. In fact, it's only the US EIA oil inventory data, which is out at 3:30 UK time. Then it's all eyes on the Federal Reserve. We've got the policy statement at 7 o'clock, where they'll be talking, obviously, and telling us what the decision is with regards to interest rates. Just to reiterate, the expectation is for a 75 basis point rate hike. Anything above that would suggest that inflation probably is still not under control. Anything below that may be an indication that inflation has started to peak, and we could potentially see a big risk move if that occurs. And then it will be all eyes on the press conference itself at 7:30, where we'll be listening for the rhetoric from Jerome Powell and how he plans to stimulate the economy over the coming quarter. Tomorrow we've got GDP data from the US, and that is pretty much that for the week in terms of high impact data. So as we say, all eyes on this evening.
Brilliant. Nice one.
Okay, so thanks everybody for watching. We'll be back tomorrow, and until then, trade safe.
Thank you. Cheers.
Goodbye.